I'm Shireen Bhan, and of course, global markets selling off, our market selling off. That is the top focus here on What's Hot this evening. The global market sell-off rattles the Wall Street. The Sensex loses 560 points despite recovering 700 points in intraday trade. The Nifty turns negative for 2018. Indexation benefits to ease the long-term capital gains tax blow is a legitimate demand, says a top government official. Also reveals that there is time to make changes as the impact of the 10% tax will start only from 2019. But there is no decision yet on any changes to the tax announcement. The Monetary Policy Committee is likely to hold fire in its policy review tomorrow. That's according to a CNBC TV18 poll. Country's top bankers confident of bad loan resolution and credit growth at the Mint conclave unanimously say that the worst could be behind us on the NPA problem. A united opposition boycotts the Rajya Sabha, alleging that their voice is being muzzled. Government hits back, says don't run away from a debate. Rahul Gandhi calls the Rafale fighter jet deal a scam after the defense minister refuses to disclose the price negotiated for each jet, accuses the prime minister of favouring a businessman. All of that and more coming up, but top focus on the markets. At opening bell, the Wall Street plunged to its lowest level that we've seen in 2 years. The signs were ominous, with the market sinking across Asia thanks to a sharp overnight fall on Wall Street. Just a few hours after opening, the Sensex was clocking losses of over 1,000 points. But with just a few hours left in the trading sessions, the bulls did stage a recovery, with the Sensex gaining over 700 points from the day's low. But nonetheless, it was the sixth straight session of losses for our markets. The Nifty is now back below the 10,500 mark, with just 4 out of the 50 index stocks ending in the green. Mid-caps mirroring the fall in the blue chips. At one point, 42 stocks were declining for every advancing stock. This improved by the end of trade to about 5 stocks declining for every advancing stock. Anuj standing by now to explain what an extremely volatile day we've had on the Wall Street. Anuj, it's been a 6-hour roller coaster ride.
Big roller coaster ride. In fact, I'm a fan of roller coaster ride, but I think those in the market today may not have preferred something like this. Just take a look at what happened today. The Sensex opened at 33,753, immediately made a low of 33,482, but after that saw sharp intraday recovery. In fact, almost a 900 point intraday recovery is what we saw, 34,521. But once again, towards the end, there was some selling pressure, and we finally ended at 34,195. It was more pronounced in the Bank Nifty's intraday chart. If you take a look at that, opening at 25,140, immediately going to a low of 25,023, as you can see in that graph. After that, look at that sharp move at around 2. Once the Dow futures turned in the green, it went and made a high of 26,140. Before closing once again slightly lower at 25,811, as you can see on the screen. Amidst all this, Dow futures saw an intraday move of 600 points. So from being down about 400 points at one point, the Dow futures were up 200 points, and that sort of continued across the last hour. The problem is that the global markets have seen a bit of a risk off, and the catalyst this time is a reversal of a product called short volatility. Essentially, there was a product where you could just short the volatility, and because you saw a huge rally in the volatility index, it was more a case of the market leading indicator turning a bit of a lagging indicator, and that's what happened in today's trade. In terms of individual stocks, just take a look at how some of these stocks moved. HDFC Bank, HDFC, I think intradays would have been better, but both these stocks, after big declines, saw intraday recoveries as well. On the other hand, IT stocks, TCS, Infosys, they were dragging markets big time. And of course, Lupin, post the numbers as well, was down quite a bit in trade. But, the big recovery was reserved for a lot of non-index large caps and mid caps. Once again, intraday would have been better, but if you see stocks like M&M Financials, Mindtree, Page Industries, Jubilant Foodworks, Canfin Homes, now they're showing gains of 1 to 3%, but all of these stocks started about 10% lower. So intraday, there was a big 10% rally. Short point here is that right now, the global markets are in a state of flux, and nobody knows what the next move is going to be in the global markets. And that's why perhaps maybe sitting on the sidelines could be the best strategy. That's what the experts tell us.
Well, yes, indeed, Anuj, the global markets are in a state of flux, and that's impacting market sentiment back home as well. Joining us now to discuss the market rout that we're seeing is Jonathan Rozelle of Ashworth. And Jonathan, appreciate you joining us here on CNBC TV18. What do you make of the manner in which global markets are falling? I mean, let's be clear. For 2 years now, the S&P 500 has gone only one direction, and that is up. We haven't had any meaningful correction that we've seen, specifically when it comes to the US market. Would you now say that volatility is something that we need to get used to?
Most definitely. I think it's amazing how quickly we get used to, or well, everybody's got used to this low volatility phase. But certainly, I think a lot of people have been saying this year will be more volatile, be aware. But of course, in spite of that, when it comes, and it always comes when you least expect it, it causes the shocks. And I think clearly, with modern trading systems and all these other new products that are around, the speed with which the volatility hits and the size of, quite frankly, the moves that we're seeing are a result of a lot of these new systems. So I think it's something we will definitely have to get used to. But, all in all, it's after the moves we've had, it's not surprising.
It's not surprising. But Jonathan, what are the triggers that are impacting market sentiment? One, of course, is the possibility that the Fed may, in fact, have to hike much more than was earlier estimated or anticipated. Will growth continue to accelerate? Is that 4% number a given? Or is the market once again overestimating growth, especially for a key market like the US? What seem to be the key triggers weighing on the market today?
Yeah, interestingly, when you look at previous relationships in different markets, different asset classes, I think it's fair to say that over the last 10 years or so, with the era of QE and financial repression that we've been living through, some of those old previous relationships had broken down. And there used to be a very clear relationship between rising bond yields and falling equities. That relationship had broken down, and suddenly it's reasserting itself. You could argue the reason it's reasserting itself is because some central banks are withdrawing and trying to move away from quantitative easing, and therefore some of the old relationships are coming back. But clearly the global economy is doing well. The data looks pretty good, but obviously the rising bond yields and this inflation scare that's doing the rounds is keeping people awake at night.
Well, talking about keeping people awake at night, people in India watching what the global markets are doing, so certainly staying up, keeping a tab of what's happening overnight when it comes to the US markets, Jonathan. But let's just talk about India specifically, because we have been impacted, of course, by global factors, but back home, the local factor that perhaps is also weighing on the market's mind is the long-term capital gains. How are you seeing the fall in the Indian markets, and what's the prognosis from here on?
Yeah, I mean, obviously, when you're computing what you think your long-term returns from a stock might be, clearly you're going to have to now factor in that there will be a capital at CGT, which will slightly influence that. I think, as usual, we get these notices and we get these events happening, and then there's a period where there's some confusion about how it will work. And clearly we're in that phase at the moment where there's some unanswered questions. 10% CGT on a story, on a market like India over the long term, yes, it's something new we have to figure in, but is it going to derail the India story? To our minds, not. But clearly it's something that we've got to think about and consider into our long-term thinking.
We saw the markets recover, coming off almost 700 points off the day's lows today in India, Jonathan. So what would the call on India be in the near term? Would you use this as an opportunity to get into stocks? What would the strategy be for India specifically?
I mean, if I'm really honest, we've always quite welcomed bouts of volatility. The issue has been obviously with a market that's only gone one way over the last couple of years. We've always quite welcomed those bouts where, weak hands are dumping quality stocks in many instances, and we've been able to pick up cheap stock. You don't get many opportunities like that in a market like India. So again, we welcome that. I think it is interesting to see this massive, intraday reversal in the likes of India. And I think, to our mind, the fact is that we now have this quite strong domestic hand that is also now in the markets. And I think over the longer term, that will dampen down volatility because after all, foreign investors, when they look at emerging markets, when they look at India, they often say, oh, why would we want to invest there? It's very volatile. The reality is the volatility, more often than not, comes due to events outside of India, and also because of foreigners piling in and piling out. Obviously, now we'll have a more steady domestic buyer. We think that actually the volatility will dampen down over time.
Okay, Jonathan, well, on that note, we're seeing a recovery even as far as the U.S. markets are concerned. But thanks very much for joining us here on CNBC TV18 to make sense of the volatile times that we're seeing across global markets today. But on to a CNBC TV18 exclusive. Top government sources telling us that while currently there is no proposal for any relief on the long-term capital gains tax, there may be a case for the same, this particularly for investors holding on to blue chips for a long period. Government sources also say that changes or clarifications, if any, may come through amendments to the finance bill. Sapna Das joins us now with the details. Sapna, as we've been pointing out, there is no formal proposal for any changes at this point in time. But the possibility of indexation, there are government officials that believe that that is in fact a legitimate demand. What are you picking up?
Government officials have told CNBC TV18 that indexation is a legitimate demand, and there is still time to make changes to the finance bill if required, because this levy will only come from 2019 onwards. So there will be still time to bring in changes. Probably a clear indication that government may be slightly amenable on the indexation front for LTCG. Apart from this, even despite the grandfathering, the fact remains that a lot of long-term investors who hold blue chips, say over 20 years, 25 years, they will still be left holding some bit of their portfolio after 31st Jan, which will have capital gains. And obviously from the new financial year onwards, this tax is going to remain. That's what the understanding is as of now. So hence, some kind of clarity on the indexation front will be required. There's also another option. There is also another point. What happens to STT? Well, so far the Finance Secretary is very clear that it remains. As of Feb 1, he had made that point very clear. But it was said that the policy perspective is that STT needs to be abolished once LTCG comes in. Whether will the government do that? Because they have already targeted 11,000 crores via STT for FY19. So would it be possible for them to bring the rate down to zero, but still continue with STT? Well, not very sure about that. But these are the policy options before the government. And let's wait and watch and see what happens at the time of movement of the amendments to the finance bill in the month of March.
Thanks, Sapna. As Sapna was pointing out, these are merely options at this point in time. No decision has been taken. If at all a decision is taken, it will probably have to be moved via an amendment, and there is still time for that. Time for us to head into a break, but coming up on CNBC TV18.
कोई ना कोई घपला हुआ है. आपने कभी ऐसी पहले कभी सुना है कि सरकार हिंदुस्तान को ये नहीं बताएगी कि किस प्राइस पे हमने हवाई जहाज खरीदा है?
The Rafael deal is a scam, says Congress President Rahul Gandhi. That and more when we get back. Well, on to a CNBC TV18 exclusive. The Supreme Court just yesterday refused to stay the bidding process to buy debt-laden JP Infra's assets. However, we learned from sources that suitors have already lined up for the company. Nisha Podar joins us now with the details. Nisha, who are the bidders that have submitted bids for JP?
Soon after the Supreme Court refused to put a stay on the bidding process for selling the debt-laden JP Infratech, we gather from sources with direct knowledge that definite bids have really been submitted for buying out the assets and whole of JP Infratech. Amongst the big bidders are Adani Realty as well as JSW Group, which have shown keen interest and have put in bids for buying out the whole of JP Infratech. We also gather from sources with direct knowledge that Cube Highways, which is Singapore-based investment firm, which has also submitted bids for buying out the whole of JP Infratech. What's also interesting is that there's fair bit of interest seen in the hospital asset of JP Infratech as well, and for that some of the other hospital players like Apollo Hospitals as well as Radiant have also submitted bids only for the hospital assets. So this will be a hotly contested battle, and let's see where it goes. But debt amount is huge on JP Infratech, 10,000 odd crore rupees. And also remember, there's this unfinished housing project which also requires fair bit of funds.
Okay, so that's the race there for JP Infra's assets. Anisha, appreciate you joining us. Now, the Reserve Bank will present its policy review tomorrow. A CNBC TV18 poll suggests that the RBI's Monetary Policy Committee will hold rates this time. However, a majority believe that a 25 basis point hike is likely in this calendar year. Ritu Singh joins us now with the details. So, Ritu, hold for tomorrow, but a hike on the annual. That's what the poll suggests.
Well, the bond markets and as well as the banks have already signaled the end of the rate cut cycle, and that is what our poll predicts. The Monetary Policy Committee will also do on the 7th of February. 100% said they do not expect any action on the repo rate front. In fact, we asked them what action they see for the entire calendar year, and 40% believe that the rates will be left unchanged at 6% throughout 2018, but 60% believe that with the risks to inflation rising, there is a chance of a 25 basis point hike in the second half of this year. We also asked them the statutory liquidity ratio, if any change is expected, but none of the respondents expect any change on SLR. On the macro, however, the street was more divided as far as the FY18 GVA forecast of 6.7% is concerned. 50% of the respondents believe that it will be left unchanged, but the other half believed it could be lower to match the CSO estimates. On inflation as well, this 4.3 to 4.7% forecast for the second half of this year, a majority believe will be raised given the threat to inflation from rising crude oil prices, as well as the government's promise to increase the minimum support price, can both impact inflation in the second half of this year. For FY19, 90% believe the range will be left unchanged for now, but there could be revision later when more data emerges. We also asked them what the tone, the stance of the policy will be. 100% said they expect RBI to maintain the neutral stance. And lastly, we asked them the statement itself, will it be more hawkish or dovish to the previous policy? The majority believes that given the risks to inflation, it will definitely be more hawkish than what we saw in the previous policy.
So hold on rates, but a more hawkish policy, at least more hawkish commentary, is what the market is factoring in from the MPC. Tomorrow we'll of course track the action, so stay tuned to CNBC TV18. But the big political story tonight, Congress President Rahul Gandhi has called the Rafale deal a scam. This after Defence Minister Nirmala Sitharaman refused to give details of the agreement for 36 jets in Parliament. Sitharaman refused to divulge details of that deal while answering a written Parliament query from Samajwadi Party member Naresh Agarwal. Rahul Gandhi also went on to accuse the Prime Minister himself of favouring a particular businessman.
मोदी जी ने पर्सनली ये डील कराई है. मोदी जी पर्सनली पेरिस गए हैं, पर्सनली वहाँ पे डील चेंज की गई है, पूरा हिंदुस्तान जानता है. और रक्षा मंत्री जी कहती हैं कि हम हिंदुस्तान को और जो हिंदुस्तान के शहीद हैं उनको और उनके परिवारों को राफेल डील में कितना पैसा, क्या रेट लिया गया है, उसके बारे में नहीं बताएंगे. क्या मतलब है इसका? एक ही मतलब है, नहीं एक ही मतलब है ना, एक ही मतलब है कि कोई ना कोई घपला हुआ.
Well, the Rafale deal back front and centre, Rahul Gandhi stepping up the offensive against the government. With that, it is time for us to wrap up this edition of What's Hot. We have our eyes peeled on Wall Street. The Dow staging a very sharp recovery. It's almost 300 points in the green currently. We will, of course, keep tracking the US markets, and we'll be back with more analysis on the global markets as well as our markets on India Business Hour. But up next, Markets the Fear Factor, where we take stock of the roller coaster ride witnessed on the Lal Street today and what it means for investors. That and more when we return.